Today is something I've been wanting to do for a long time. We're actually going to dive into JWB's entire model to explain what turnkey is versus what vertical integration is versus what JWB does better than everybody else in the world. We take it up a notch right now when we go live on Facebook for the Tuesday edition of the Not Your Average Investor Show. We are officially live on Facebook. I am your host, Pablo Gonzalez. With me, as always, except for the moment that he just left to fix his computer and left me out in the cold, the man with the genius concepts, the man that generates cash flows, the great co-host. They call him GC because of all those things and because his name is Gregg Cohen. Welcome, Gregg.
Welcome. Thank you, everybody, for being here. So excited to be here on this beautiful Tuesday and for Pablo's athletic debut day.
Debut day. That sounds very French. I like it. Oui. Welcome, everybody that's already lighting up the chat. Lewis Carlson from Somers, Connecticut. Ken Moline, a past star of the show. Mark Larrett, first-timer from Bloomington, Indiana. Mark already interacting like a pro by chatting with panelists and attendees at the same time. This is awesome. As the regulars of the show know, this is very audience driven. We want you asking questions. We want you interacting with our community that shows up here week in and week out and getting your own opinions on what's going on in here. So the number one way to do that, to interact with each other, is the chat. And there is a little trick to the chat in that when you first start chatting, it's defaulted for only me and GC to see it. So you got to just change that little button right above where you type to panelists and attendees instead of panelists only. And then afterwards, if you want a question asked live on the show, to be on the stage of the Not Your Average Investor Show and maybe make it to the social media content streams that we repurpose and the podcast and have your name in the lights, put your question in the Q&A box. That's another separate things that you pop open. And really the reason why I ask that is because there's generally a lot of interaction in the chat and it moves really quickly while the Q&A stays present in front of me. So I can always go back to it and ask Gregg when it's the right time to bring stuff in. And last but not least, again, since we have a couple new folks with us, a really great way to start finding out about JWB is their passive income guide. And you get that at jwbpassiveguide.com. I'm going to, again, put that in the chat. I'm going to put the Facebook group in the chat that we would like everybody to join. Gregg, I kind of blanked out on the amount of people we have in our Facebook group. Now we have 2,500.
I think a little bit north of that. Yeah.
A little bit north of that. We used to call it the Secret Cool Club. Now it's just a cool club because it is not a secret. 2,500 people. I've been asking for this subject of this call for a long time. If people are new here, you don't know this, but the regulars know this. And it's the idea that I invested with JWB. I got on JWB's radar somewhere around 2014, 2016, something like that. I lose track of time. And I didn't really understand the business model. And these days, with JWB being my favorite client of all time, I'm always talking about them. And people are asking me like, what's the business model? What is it that they do? And we've never really had that piece of content. So we figured that we'd pair this idea of showcasing everything JWB does in order to arm you to be able to make the distinction between somebody who's not turnkey versus actual turnkey, because people are throwing that term around. And then this idea that JWB is beyond turnkey. They are vertically integrated in a way that really provides a key advantage for those that are looking for long-term wealth creation. And that's really, really what separates them apart. So I talked to Gregg into having this kind of like explain it to me like I'm an idiot, because I kind of am, on how it all works, how all the pieces of the puzzle fit together and bring you along on this journey. So that's where we're going to get started. Gregg, you want to kind of tell me from the 1,000 square foot view. I know that the purpose of turnkey and the purpose of being really vertically integrated is ease of use. Can you kind of frame me up for why JWB does what it does, and then we're going to get into the nuts and bolts of everything that it takes to be a real estate investor without having to know anything like real estate, like I am these days.
Yeah. And you're right, buddy. I love talking with you about it, and through the group, talking with folks that, might not be so aware of how to invest in real estate or how to invest in rental properties. And for many people like you, Pablo, it was maybe this thing that sort of interested you, but it was not even on your radar as far as how you would eventually do it. Probably wasn't high on your priority list, and you had other investment options. And you said, you know what, I'm not even going to investigate that because it seems hard. seems hard to, it's not easy for me. It's not my sphere of knowledge, experience. And there are other things that are have a lot less friction. And, and those things are your typical traditional asset classes, stocks, bonds, mutual funds, right? And, if we start to expose some of the pain or the problems with, just investing in the stock market, I think we all sort of have realized that it tends to go up and it tends to go down, and it doesn't tend to follow fundamentals, right? Sometimes when it's going up, you don't know why it's going up. Think GameStop, right? Sometimes when it's going down, you don't know why it's going down. And, people at the core are frustrated about that. If you have long enough in the game, people will say that investing in the stock market will work. And it does, right? Earning maybe a 7 to 9% return over the long haul really works for people. But the problem is the inconsistency. And people really haven't had an opportunity to go to an asset class that produces above average returns that also produces stability and consistency. And they certainly haven't had an opportunity to do that where it's easy to do that asset class. So when my business partners and I were thinking about this business model 15 years ago, the big aha moment for us was we can take this asset class, rental property investing, and make it easy for people. If we can make it easy for people, then it becomes something that they can build into their overall financial portfolio, something they can rely on, enjoy the benefits of this asset class, but then it becomes scalable. And then it can become a part of their overall portfolio rather than just people having stocks, bonds, mutual funds, 100% of their portfolio and something that's variable. Now rental properties can be 25, 50%, 75%, depending on what the right percentage is for you. But none of that's possible unless what we do is make this process simple and easy for you. Doesn't mean it's simple and easy for us on the back end. It's got to be simple and easy for you. I actually was looking at a Gallup poll. This was done a couple of years ago. And the folks at Gallup, when interviewed a cross-section of America, and they asked folks, what do you believe the best long-term investment is for you? And by a large majority, by a wide margin, the cross-section of America said real estate. It was better than stocks, bonds, gold, CDs. People understood that real estate was the best long-term asset class, according to this poll. They then went and asked the same cross-section of America, how many of you, what percentage of you have real estate in your portfolio? And would you believe that it was not the number one choice? It was not the number two choice. It's not the number three choice. It was the fifth most popular choice, behind gold, behind bonds, behind all these other asset classes that people had already just stated they didn't think was best for them long term. So when you see data like this, it basically substantiates what we all believe, is that real estate has been hard for people to get into. People have understood the potential benefits of it. It's just been hard. So in a nutshell, what JWB does is we're here to make this asset class easy and replicable for you.
Love it. And I know that's your passion moment, right? I know that for you, it's solving that need that drives you, this idea that, again, why we created this show, right? Like people that don't want to just have an average return. They don't want to have this like average experience in the stock market where you just can't really count on stuff and the way that you would like to, and go through these wild swings and make it as passive as humanly possible. That is the why. Let's talk about how you do that, Gregg, right? Because there's a couple different ways of getting in real estate. There's the super active piece, right? That's not who you cater to. And within the bucket of people that want to do it passively, there is kind of like three different buckets of people that look to serve them. People that are claiming to be turnkey, but they're not really turnkey. People that are turnkey. And then there is vertically integrated. And if you can kind of tell me the importance. Because we're going to get to this at the end, exactly how this happens. But the true importance of vertical integration, the way I understand it, is controlling the long-term piece of it. And then the turnkey is the short-term tangible piece of it, right? Am I kind of getting that correctly?
Yeah, there are a number of ways to be able to make money in real estate and even just in rental property investing. And the JWB way might not be the best approach for you. The other ways, they do have merit. It just depends on what your goals are. But if your goals are to invest for a full market cycle, what we're going to talk about today is the fact that the best way, the best risk-adjusted returns for you, if you are investing for the long haul, are to be investing in an operation that is vertically integrated from soup to nuts, handles every part of this equation. We're going to talk through what that really means here in just a minute. But there's a big difference between investing in rental properties for maybe a short run, right? Investing for 1 year, 3 years, maybe 5 years. You may not need a fully vertically integrated company to do business with if you have a very short-term mindset with your rental property investing. Let's say, hey, the market's been up for the last few years. We expect the market to go up in prices. If your mindset is, hey, I'm going to get in today and I'm going to sell in 2 or 3 years, you may not need to do business with a company like JWB because you probably can get great risk-adjusted returns if this turnkey operation that you're thinking about working with actually, is there maybe over the next 2 or 3 years. It might be good enough. But if you are trying to fully maximize 5 profit centers and you want to do it in a way that you mitigate risk and you do it over a 20-year period, it is a huge task to accept money from somebody with the intention of giving them that money back in 20 years plus a whole lot more. And so the threshold is a lot higher. If you're in this game for a long time, if you're in for a full market cycle, you really need to set your sights on a vertically integrated company.
Love it, man. So let's show what is the model, Greg. I kind of talk us from capital to land and asset acquisition to construction to property management to client management and forward. Because to me, like this call is, I dedicate this to you, Pablo, from 2016, right? Like understanding this, right? So there is going to be some kind of like, what really is turnkey? Is this really possible? Because from the moment that I actually started interacting with you guys as a business, it started really blowing my mind. And I know that there's different levels of knowledge in the clientele base and who comes to you, but this is really for that person that's just like, okay, what is it that you do? give me the whole view.
Yeah. And we cater to those folks that have no clue and would never call themselves real estate investors. I mean, Pablo, you now have your second JWB property under contract. Do you go and introduce yourself as a real estate investor?
I'm about to. I mean, from the moment I signed that first one, I was like, hey, Pablo Gonzalez, real estate investor.
Well, that is nice to add on to the business card, but you have a number of ways to introduce yourself. And you probably wouldn't go with real estate investor. I mean, we have over 1,200 clients. The vast majority of our clients, when they're at a dinner party, don't introduce themselves as a real estate investor, yet they own 3, 5, 10, maybe 20 rental properties.
Yeah, totally. And I was being tongue in cheek, right? Like I feel very insecure about like the credibility that this show gives me. I always tell people I play a real estate expert on TV, but I don't know anything about it. I've just been able to be around it so long that I super trust this model, right? Which is why I want to get it out there.
And that, if you're one of those folks that has deep down, you've been wanting to get to rental property investing, this model, this turnkey, this vertically integrated model is really built for you. It's leveraging a team and the experience and the ability to source inventory, to be able to manage costs on the construction side, to be able to manage properties well for you. You can work with a team of experts. And so don't feel like this is beyond your grasp if you fall into that bucket like Pablo did a few years ago and probably still today, Pablo. I mean, when it comes to a lot of the details on your property, as far as how the sausage is made, do you know those details?
No, absolutely not. Like, I don't know the scope of work. I don't know any of that stuff. I just know that you've provided that cash return and that ROI for 3,500 properties, and everything else makes sense. So, that's where I'm at personally, right?
Why does that make sense to you? These are properties that you've just invested hundreds of thousands of dollars. You've never seen these properties. You have no intention to. How does that make sense?
Greg, to be perfectly honest, it's been this seat that I sit in, right? Like we've sat there talking to so many people for the last year of having a similar experience where you guys have underpromised and over-delivered. And then when I juxtapose that with joining your team meetings and seeing the TMM and like this idea that everybody that I've interacted with in the company is this like better than, better than average person you run into any company, and the experience I get with everybody, and then understanding all the different pieces of the chain, right? All the links in the chain that are controlled in-house by the machine that you've built, it all hits, man. So
if you compare it against the other things you're doing with your money, like investing in the Peloton stock, right? You didn't go to Peloton headquarters and start to look through the financials on Peloton headquarters when you made that decision to invest in Peloton stock, did you?
No, I didn't. With Peloton, I had also like a feeling, right? Like I met enough people that have bought a Peloton that were like trying to sell me a Peloton with no stake in the game, and trying to get me into their like Peloton WhatsApp chat with no stake in the game. And I realized people are really passionate about this thing and it saves them time, right? Like the idea that once you don't have to spend 45 minutes going to and from a gym to get a great workout, you're not going back from that, right? Like I see the same thing with JWB, right? Like once you're able to buy multiple properties, spending about a total of 2 hours of your life doing it, and then you're spending a half an hour a month collecting that money, it's pretty compelling.
I mean, you believed in the model and you trust our team.
Yeah.
You believe in our team.
Yeah, totally.
Then
Man.
it makes sense.
And I feel like I got to get you back on track here, man, because you're going way too deep into my story. Let's talk about your story. Like talk to me, like explain the whole process, man. Cause I get it, right? Like this doesn't have to be the Pablo testimonial show.
Exactly. I mean, and that's how it is, right? We're going to break down every step along the way here. But if you put this against the context of what you need to know and where you're currently putting your money that you probably feel very comfortable putting it towards, it's probably in the stock market or bonds or mutual funds, right? The things that we're going to do in the background are done to preserve your cash flow, to protect your capital, to make it grow over time. And that's all that we've got to do. It's important to lay these things out, but just know that this is done for you. So it's built and put on a silver platter for you, just like almost as easy investing in the stock market or a bond is the goal here. But let's get into kind of the details there. So it starts with market insight, right? It starts with knowing absolutely everything we possibly can know about our market here in Jacksonville. This started, of course, 15 years ago when we started to put our own money into the Jacksonville real estate market and started to buy our own rental properties when it was just my business partners and myself, and built up a portfolio of rental properties in the beginning. And it also starts with making sure we're up to date with market tracking, market metrics, knowing what the market is doing today, and having an idea of where the market's going in the future, which allows for us to use the capital that we have and to make acquisitions to make sure that we have inventory for future clients. So it first starts with acquisitions, but you can't just acquire unless you have literally years and years of research, years and years of experience, and you also have the capital lined up. And the capital to do this business model is quite intense, as you can imagine, right? At any point in time, I think JWB we own over 1,100 properties was actually the number. I was just looking it up the last few days. In-house right now. Those are at various stages of construction, right? Those are at various stages of not even construction. A lot of that is just land that's not even being built right now, right? Now, of that, there's about 400 properties that my business partners and I own. And then, of course, we always have inventory that's available for clients. But there's literally, call it over 500, 600 properties that are there that are they're acquired right now. They're working through various stages of, call it permitting, or issues with the utilities companies to make sure that we could actually build on those, or whatever the stages are. So it starts with this incredible foresight, the ability to actually be able to have the capital required to buy 1,100 properties at one time. And why this is important for you as an owner is because inventory is really scarce right now. And if all we did today was buy properties that was going to meet the demand for you as an owner of rental properties, there's no way that JWB could meet the demand to do that. as a vertically integrated company, we had to do this literally a decade ago. We had to start this a decade ago. That's why in 2011, we started to buy more lots than we were going to sell. And we have built up this excess inventory over years and years and years. It's the only way that right now we're able to have inventory for every client who comes to us at the moment, whereas everybody else in the country is talking about not having any inventory.
Got it. So step one is insight, capital, and acquiring inventory, which in the JWB world, that is land and that is properties. And that is all done in-house, controlled by you, right?
Mhm.
And that is the reason why the difference being most so talk to me about the difference between I'm not really turnkey, I'm turnkey, and
Yeah.
I'm vertically integrated in that snapshot.
Yeah, I think it's really important to differentiate that, because that's the JWB way of doing it. There's varying degrees here. There are a lot of companies out there, and if you go and do a Google search and search turnkey rental property companies, you're going to find, I don't know, 20, 30. Everybody claims this term turnkey, but the reality is that the vast majority of these companies do not even own the assets that they are selling. What they do is they broker the relationship between the buyer and the seller, and they are basically a high-priced middleman. They are a high-priced broker, but they do not actually own the assets that they are selling to you. Everybody uses this term turnkey. My definition of turnkey is a much higher threshold, and I think it should be for you. Because at the end of the day, if you don't own the assets, how can you make sure that you have a runway of inventory for clients? Right? How can you make sure that if you don't own the assets, that means that you didn't actually renovate or build the asset? How can you make sure that it's up to your standard of construction if you didn't do the work? Right? All of these things, how can you even make sure it's going to close? If you're the broker and then the seller has an issue right before closing, how can you even confirm that that seller is going to be willing to sell it to the buyer at the closing table when it matters most? So all of these are, unfortunately, there are lessons that new turnkey investors learn the hard way, because they do business with somebody that doesn't actually own the inventory, and it makes for a poor impression many times over.
Yeah. So what I'm hearing right now in this stage is turnkey versus not turnkey is the idea that they already owned the asset before you got to the table. And then turnkey versus vertically integrated is that you have way more assets than what you're planning to sell in the next 6 months.
Yeah, I really thank you for kind of breaking this down. Let's go with like the fake turnkey, the real turnkey, and then vertically integrated. Fake turnkey is not actually owning the asset. Real turnkey would be owning the assets, but you probably weren't thinking 5 years, 10 years in advance for inventory for your clients. Vertically integrated is you line up the capital, you have the market insight because you're in one market, you make those big bets 5 years in advance, 10 years in advance to literally line up 1,000 properties that you own, so that when the market inventory becomes scarce, you can be there for your clients to have inventory. Those are the three elements.
Yeah, and just knowing from our conversation this morning, and putting it together with the numbers you just said, you own 1,100 properties, but like you said, you own 300 to 400 cash flow homes, right? So there is 600 properties that JWB is sitting on that hasn't turned into a cash flow producing asset. It is inventory sitting there waiting to become offer to somebody down the line, because you know the market dynamics that are coming, because you're vertically integrated.
Yeah, and I'll point out, it's not like JWB could just flip a switch and turn those assets into inventory. Those are all what I call hairy properties, right? They got some hair on them. There are issues with every single one of those properties that we have to buy. We buy them undervalued. We remedy whatever issue it is. And many times that takes years. You have to own the asset to be able to secure it, to be able to remedy those issues. And then years down the road, this will provide inventory and a runway for clients down the line. But you have to have that backlog if you're a vertically integrated service provider.
Got it. All right. So then we're there on the acquisition, capital and acquisition part. I would imagine that the next step is construction. Can you tell me from a not turnkey, vertically integrated? First of all, tell me what y'all do. What does JWB do on the construction side?
So our contractor base is it's a real asset, and it doesn't get talked about enough. Between the builders that we have who build our homes for us, and the GCs and the general contractors and the subcontractors who do our large scale renovations. Large scale renovation would be when we buy a property that needs a substantial renovation. We do it in-house before selling it to you as an asset, as an owner there. So those are substantial renovations. Those are $40,000 renovations on average. And these homes are relatively small. There might be, 1,200 to 1,800 square feet. So to put $40,000 into a home is certainly substantial. And so these contractor bases that we've built up literally over the past decade plus. And these are folks that know that with JWB, they are going to get a tremendous amount of volume, right? This year, we're on pace to start 600 homes. We're on pace to purchase 1,200 homes this year. And we're on pace to renovate, just to do large scale renovations and the ongoing property turn maintenance. We're on pace to renovate over 800 properties as well. And so we are known as that player here in Jacksonville in terms of rental property investing, or in acquiring real estate, or in construction, as a place that drives significant volume. If you're a contractor, and we're also known as one that pays every single week on time, which is really, really important to a contractor. Many times these contractors don't get paid regularly. That's something they have to fight, and it's a big challenge to their business model. So we offer volume, we offer quick payment, and of course, there's a lot of other benefits to doing business with us. So this contractor base, we give as much as we can to make sure, in terms of volume, paying quickly, because one thing we're going to ask for them is to, number one, uphold our standard of construction, which we do. The other thing we're going to ask of them is low prices and volume prices. And volume pricing is incredible for you for two things. Number one, in order for us to actually create inventory opportunities for you as a client, we have to make the numbers work so that JWB can buy and renovate the property, or buy and build the property, be under market value. So then we can then sell it to you at market value. And a big part of that cost structure is, how much did it cost to build? How much did it cost to renovate the property? If we had to pay the same rates to renovate properties or build the properties as your normal homeowner who wants to build a house, or your normal person who's hiring a contractor, we couldn't provide the same amount of inventory for you as a client. So we get significant cost reductions there. But the biggest win for clients long-term is the fact that when contractors come to JWB and they're a part of this incredible volume, and we talk to them about how we need to get cost reductions, we also let them know that these cost reductions are in place for the big projects, the $40,000 renovations, as well as the small projects. And if you're an owner, you're going to have minor maintenance costs that do pop up every once in a while. You're able to get that significant volume-based cost reduction on the maintenance cost on the big stuff, as well as the small stuff. So there's no way that you'd be able to get as low pricing on your routine maintenance, or think about when your property turns over. Those are relatively small renovations. You're able to leverage that. And there's no way that you could pay those same rates if you were to go out there and try to secure some of these contractors to do the work without that amount of volume. Just to put in context, we start over $3 million worth of construction every single month at JWB.
Every month.
So that's some volume, and that helps the short run for inventory for clients, and it helps the long run as far as keeping our maintenance costs down for you, and you get to leverage that.
So as you're saying this, I'm hearing, and this is a guess, right? But like I'm assuming maybe in this one there is no way to hide being turnkey or not turnkey on the GC side, but there is a difference between vertical integration, right? I would imagine that every turnkey provider is saying, don't worry, we got the contractor handled, and they give it to you already remodeled. And okay, so tell me about the difference between not turnkey, and vertically integrated when it comes to the construction and the maintenance piece.
No, I'm so glad you asked. So the non-turnkey, the fake turnkey approach is, many times companies will not own the asset. Okay. Then they go and they basically align the buyer and the seller. So they're that middleman there. and the property will need renovations. So they'll ask you as the client to purchase that property in a non-renovated state. Then they will connect you with a contractor that they trust and that they supposedly have accountability and management over to actually renovate the property after you actually own the asset. That is very normal in our space. And again, that is passed off to you as turnkey, but in my opinion, that's fake turnkey. Because what's happened there is, number one, the asset is not renovated right off the bat. You actually own it in an unrenovated state. You're hoping that that relationship between that contractor and that turnkey company is strong, but at the end of the day, getting a renovation finished on time and on budget is one of the hardest things about this business. So that risk is on you, in essence, as the owner. And then, oh, by the way, your money's in play, but you're not earning any cash flow for a long time, right? It might take 2 months, 3 months, 4 months before this renovation is finished. Your capital's been down since day one. And then after it gets finished, then you got to rent the property. I mean, you might be 6 months or a year before you actually see some positive return. So, but again, that's passed off as turnkey in this industry. It's fake turnkey, in my opinion.
Okay. So not turnkey is not getting a completed asset. Here you go when you put money in. Then regular turnkey means getting that. But then there's a difference between turnkey and vertically integrated, which sounds like the depth of relationship with the contractors and that volume discount. Is that where the vertical integration comes into play?
The depth of relationship, I think, can be accomplished by a turnkey company who has done this for a long time, right? I think of other turnkey providers that might have been around for 5 years or so, and they might have the depth of contractor relationships or maybe close to what JWB has. I wouldn't say that that's the big differentiator. I think many times they don't, but you could, right? So we'll call real turnkey is that you have strong relationships with contractors. You sell the asset after it's been renovated. That's real turnkey, in my opinion. The vertically integrated approach would be the significant cost reductions, like you pointed out, because in order to have $3 million worth of construction going on at one time, you have to own a tremendous amount of land in order to be doing a tremendous amount of projects at one time. And so it goes back to that. Well, in order to do that, you had to be planning for this for a decade in advance and putting your money into owning that land well in advance. So that $3 million worth of construction is not something that a typical turnkey company will ever touch. $3 million worth of construction that we start every single month. You just won't see that from the turnkey space very often. But that is what significantly reduces the cost of construction for you in the short run and the long run.
Yeah. And there's something that I've learned on this show is this idea that you buy the property one time, but then you maintain it for the life of it, right? So like those costs that you need to count on for the contractor to come in and fix something will be there forever and will continue. So that relationship lasting a long time is really, really important. And another thing that I think people won't automatically assume is this idea that, man, when there's an emergency, the person that gives you $3 million worth of business a month gets it done, right? Like hurricane, which I know is on someone's mind if they're buying something in Florida, right? Like when Florida's running around, everybody's strapping down their properties. Guess who gets their mouth fed, right? Like coming from the hospital construction industry prior to this, I know that the big healthcare system got our manpower, right? Like the Minute Clinic wasn't getting that.
Exactly. I mean, and this is part of that relationship we build with the contractors up front when they come onto our team. Hey, listen, we're going to give you more volume than you probably could handle. That's why we're going to give it to you over time to make sure that it's the right fit and that you can handle it over time and build you up over time. We're going to pay you quick. We're going to pay you every single week. We're going to ask for cost reductions and we're going to be treated with high priority. So, when we do have major storms, those contractor teams in the week before, when we have that heads up that a storm is coming, we're removing all of the dumpsters. We're tying down whatever needs to be tied down. We're making sure we're in the neighborhoods to make sure that our residents are taken care of and we don't have loose debris in places. Those things, I mean, that's not something people talk about, but that's really important to do, to taking care of residents and of course, protecting clients' properties. And then after the storm hits, you can't get a call through to a roofer if you've ever been around a major storm, right? JWB has that direct line. We are able to prioritize our clients' properties so that in the event that there is a significant damage or a significant event that causes major damage, we've got those contractor teams in place. And of course, our team internally is working to make sure that your assets are protected as well.
Awesome. Let's take a couple quick questions because I think they're very germane to what we're talking about here. David Gray asks, any plans to expand into other U.S. markets?
I love that question, David. It's one that we get often. And actually, it's a perfect segue into this vertical integration topic here. The short answer is no. And that's a very different answer than you'll hear from other turnkey companies. The space right now is searching for inventory so much that it is causing almost every turnkey provider out there to go and chase it in other markets. But we have always looked at that as a significant risk to our clients. It's part of it is just a personal decision. We love our team here. We love the relationships that we have here. And we have built this so that we don't need to go to other places. So there's a little bit of a personal decision there, but there's also a significant risk. At the core of it, again, I go back to when somebody becomes a client of ours, I look at them as giving me a certain pile of their money. And me and my team set that expectation that we're going to give that back to them, plus a whole lot more in 20 years. And in order to do that, you have to go back to some of the things we talked about on this call, right? You have to be thinking sometimes 5 years, maybe 10 years in advance of what your capital needs are going to be, meaning JWB has to think about what our capital needs are going to be. We have to be thinking about what's that opportunity for us to acquire land today so that not just the cycle that we're in, part of the market cycle that we're in today, how can we be prepared for the next one, right? Today, JWB has inventory and we don't have to go to another market because we were already planning for this part of the cycle 5 years ago and 10 years ago. And so when folks ask us if we're going to go to another part of the country, I think about how ill prepared we would have been in Jacksonville if we were a part of 5 or 10 or 15 different markets out there. You just can't have it all. You can't have this level of deep knowledge, experience, relationships in one market and replicate that in a short time period over 15 markets. But if you look at everybody else out there right now, they're opening up this market, they're opening up that market, open up that market. I guarantee you that's not what they want to do. They're doing that because they don't have inventory. So short answer is no. We don't intend to go anywhere. We've actually built this. We believe the best risk-adjusted returns for our clients over a full market cycle are at home here in Jacksonville, with us being that team, that team that can perform over the long haul. And so that's kind of how we built it.
Yeah, David, spoiler alert, right? We're gonna go through two more parts of what you probably understand as turnkey and how it goes, being the property management and the client, success story of portfolio management part. And then we're gonna expand beyond the property line and beyond the client to really talk about how much JWB is betting into Jacksonville. So we're going to get to that in a second. But right now, a really good segue is Mark Larrett's question, where he asks, does real turnkey include long-term relationship after the asset has been purchased? Or is that also an aspect of vertical integration? Greg, you want to talk about the next part of this, which is asset is built. Now it's manage this property for the investor.
Yes. So that property management angle is so critical. It's one that many people think is just a commodity out there. They think property management is something you can get from anybody out there who posts a property management sign on their door. But it's what I try to help people understand is that you've got relationships in your financial sphere that you place a high value on, whether that's your CPA or financial advisor, right? The property manager should hold that same clout for you, because if this is an asset class that you want to be a part of your overall financial portfolio, you're probably going to need to own 3, 5, maybe 10 or 15 properties in order to produce a certain amount of income for yourself. It's dictated by your goals. It might be 3, 5, 10, whatever it is, but you're going to need to have multiple properties most likely to get there, right? There is not a single better place for you to do your due diligence when going into this business model than making sure that you love the team that you're doing business with. Many people feel that if you had to rank it, team, market, and property, that they would focus most of their due diligence on the property. They would spend a little bit of time on the market, and the team behind it would be, they'd go to Google search and try to find somebody after the fact that they did, after they purchased their property. But if I could leave you with a couple of points to write down or to think very, very seriously about, our approach and the approach of our clients is different. It's find a team that you love, a property management team that you love first, because that's going to be that 10, 20-year relationship that you have. Fall in love with the market as well. And if you fall in love with the team and the market, the property is just a widget. The property will be recommended to you by a team that you love and a market that you love, and it's interchangeable. And so with that being said, the property management relationship is critical, and it starts with making sure that your goals are aligned. That's the first and most important thing that I think differentiates maybe a fake turnkey company, a real turnkey company, and a vertically integrated company. So should we start there, Pablo?
Let's start there, man.
So I think that one of the main reasons people tend to have a sour taste in their mouth about rental property investing comes down to the simple alignment of goals, or the misalignment of goals for property management companies. And the most clear example of this is that as an owner of rental properties, if you've owned them yourselves, or like myself, I've owned them for 15 years now, it's very clear to me that there's a direct correlation between how long my residents stay in my homes and how my return on investment works for that property. The longer I keep my residents in my homes, the less turnover I have, the less maintenance costs, the less vacancy costs, the better my return on investment is. So as a property manager, they should really be an asset manager for you, right? They should be managing this asset for you. It always shocked me in the beginning, especially when I first got into rental property investing. Once I understood this, it never made sense to me why this property manager, this asset manager who's supposed to be delivering a return on investment for me, why they only signed 1-year leases. I couldn't figure it out. And I didn't figure it out until we became a property management company ourselves. And I saw how the actual numbers worked. I saw how the books worked for property management companies, right? We have since purchased 3 property management companies. So I see it all the time in the companies that we purchase and the companies that we look at and we don't purchase. I see what a high percentage of their revenue comes from tenant placement fees. All right. A tenant placement fee is the amount of income that a property management company earns every time they put a new resident in your home. This typically is between 25 to 50% of that property management company's revenue. So let's kind of connect the dots on a few things here. We understand that as rental property investors, there's a correlation between how long my residents stay in my home and my return on investment. The longer they stay, the longer my returns are going to be, or the better my returns are going to be. You would think that if somebody's responsible for managing that asset for you, that they would then encourage those activities that would lead to long-term resident stays, right? Some of those activities would be long-term leases, right? Sign a longer-term lease than 1 year would probably get you to a place where people are going to stay longer. But if you go across the entire landscape, that's just not how it's done. Property management companies sign 1-year leases. So you go one step farther, and it comes back to the misalignment of goals. 25 to 50% of their revenue comes from placing a new resident in your home every year. And at the core of it, there's nothing more important for your property management company to do is to keep them long-term. But if they do that, you're asking your property management company to make half as much money and probably work twice as hard when they're probably not incentivized to do either of those.
Yep. I mean, I've heard you rail about that for, a year plus now, right? So as I'm contextualizing it to this conversation, fake turnkey is give you, I guess give it to me. I don't know what, I have a harder time knowing what fake turnkey versus turnkey is versus turnkey to
I do too. We're kind of, this fake turnkey is a new term for me. I haven't thrown it out here before today, but we'll just go with that. Right. So, fake turnkey is
it may not
not
exist,
having, no, it really does. I mean, fake turnkey would be not having property management in-house. And that's just so common. right? Your fake turnkey is people that say this is a turnkey asset that you're buying with them, but it's not the same person who is selling you the house. That person is not the same person as the one collecting the rent.
Got it.
And when you tie the dots there, when the same person who's setting the expectations and selling you the house and setting what the rent amount should be and setting what the maintenance and vacancy cost should be is the same person who's responsible for actually delivering that, you remove the blame game. You remove it, you remove all of that potential, for a poor experience there. So that's fake turnkey. If somebody is selling you a property and the property management is not in-house, it's fake turnkey in my opinion.
Okay. And then turnkey is that. Turnkey to vertically integrated, my guess would be if incentives aren't aligned, right? It would be if the turnkey provider that has a property management is really using property management as more of a revenue driver, more so than a longevity play to get more properties. Is that kind of it?
Yeah. If they only sign 1-year leases, but they've got property management in-house, we'll call that turnkey because that's easy. That allows you to get into this asset class. Vertically integrated in JWB's approach is that long-term 20-year approach. A vertically integrated turnkey property management company says this. They say, listen, if we knowingly give up tenant placement fees that we could earn by signing 2-year and 3-year leases, we're going to give up a significant amount of revenue, right? That's 25 to 50% of a normal property management company's revenue. Vertically integrated says, I'm willing to give that up because if I do that, the return on investment and our goals being aligned is going to get higher. The return on investment is going to be higher over a 20-year period. And through that 20-year period, the bet that a vertically integrated company makes is that they'll be able to help you with that buying plan so that you'll come back and buy many more properties over the long haul with that company, and you'll tell your friends and family about it. And that vertically integrated company should make more money when you make more money over the long haul if they do it right? Your returns on each property should be higher. You'll come back and buy more properties with them, which the revenue that they've earned on you as a client will be so much higher as well. So everybody can win, but it's not a threshold that you see very often.
Beautiful, man. I love that. Yeah, I think you nailed that one. So then finally, still within the confines of the property and the client, is the portfolio management, is the idea that I have a portfolio manager when I bought my house that I spend a half an hour on the phone with a awesome dashboard that tells me where all the costs are and every receipt and everything is happening. Can you kind of give your own description of what the portfolio management piece is and give me some delineations? Just tell me what y'all do and then we'll go into our fake turnkey, not turnkey thing.
Yeah, there we go. Our client service team is incredible. I mean, you want to make sure if you're investing in this asset class, you're probably coming from far away from Jacksonville. You might be in California, New York, Virginia, right? All over the country, all over the world, right? You want to make sure that when you have your money in play, that somebody has your back on the ground. And when there's a problem that comes up, as there will be many, many problems that come up in rental property investing, I tell people you've got a family living in your home that's not your own over many, many years, right? There are problems that are going to come up. You want to make sure that that team knows your assets intimately, understands what the problem is, and already has a better solution than you probably could thought of on your own. And definitely it's less expensive for you on your own over the long haul. It's a better source and a better solution. And they've already got that in place. At the core of it, that's one part of our relationship with our residents long-term. They have to feel like we're an advocate for them, with them being thousands and thousands of miles away. The other thing that clients want from us is they want us to help them grow their portfolio. So that's a big part of our client service team. We're in tune with what your goals are because we established this early on with you as a client. We share this with you. It's on your portal every single time you want to log in there. You see what your buying plan is. You see what goal you're working towards. And then we're talking with you months, sometimes even years in advance of you being ready to buy that next property. So we work out whatever financing challenges there may be. If there's title challenges, maybe we needed to figure out if it needed to be in an LLC or whatnot. Those things are taken care of in advance. We're searching inventory with you within JWB. That process is done in advance for you. So you can show up right on your timeline that you gave us and execute and buy that property. And oh, by the way, that inventory is there because JWB did this for so many years ahead of time so we can actually fulfill your buying plan for you. So it really comes down to being an advocate for our clients who will never see these properties many times over, and then allowing them to grow to accomplish the ultimate plan.
All right. Now you know what's next. What's fake turnkey? What's turnkey? What's vertical integration when it comes to this piece? Is anybody else doing this? Is anybody else really giving you, like, I would imagine that there are other turnkey providers that are telling you, don't worry, we're one phone call to make. Or are there, or are there not? Right. Like I have a hard time believing. It was so eye-opening to me when I took my first call with Cody, of just having this like bubbly, smart young person showing me how my money was making money for me on like a one-to-one concierge level. Like it really felt like I was all of a sudden wealthy or something.
That call was legendary, man. You have referenced that call with Cody a number of times. It was pretty awesome, huh?
I've never felt rich like that before. It was amazing.
It was cool because I didn't prep you for that, right? We hadn't talked about it. And then it was cool just to have those kind of candid moments in your experience with JWB. And that's really how it should be. So, fake turnkey would be, this is largely a company that doesn't own the asset and doesn't do property management in-house, right? Doesn't own the asset, didn't renovate it because they didn't own it, and doesn't do property management in-house. They passed you off to another property management company, right? They're not going to have this type of customer service, advocacy, and helping you grow type of relationship. So that's fake turnkey. Kind of comes back to it. They don't have a customer service team in-house. Many times they'll say that they will, but JWB has 13 customer service teammates, right? Client relations teammates, right? We have an organization of 80 people. That's a really interesting way, a really easy way to define fake turnkey versus real turnkey. Ask them how many people they have in their organization, right? We try to run a lean ship. We do not just hire people just to hire people at JWB, but it takes 80 people for us to create this silver platter approach to putting rental properties there for our clients, right? A lot of people out there who are turnkey rental property companies, they don't have a physical office. It's 3 people or 5 people running around. I mean, you'll know because you'll do video calls with them and they'll be in their bedroom, right? It's, maybe some people are in COVID times now. Maybe that's a little bit more appropriate here, but you'll know them pretty soon when people should be back at the office, right? Right. If people are operating out of their house, they don't have a physical location, they don't have more than 5 or 10 teammates, employees, that's a sign that they're not really there to create this easy passive approach for you. So ask them how many people they have. That would be a good sign of what's fake turnkey and what's real turnkey.
All right. And then vertical integration.
So, well, kind of real turnkey would be, they actually do have a team in place. They sold you the asset. They have property management in-house. And usually if they do that, it would make sense for them to have a client service team as well. So, that would be real turnkey. If they're in-house, they have client service personnel. They need to have dashboards and metrics that make it very easy for you to be able to be able to look and see how your assets are performing. A lot of times the metrics will really be hard to see though. Many people don't have very streamlined dashboards. So JWB actually created our own. It's called the Client Roi Report, which, have you seen that yet, Pablo?
I have, and it's extraordinary.
Yeah. So that's that. So now we're getting into kind of vertical integration is that incredible data flywheel that we have, right? There's a difference between putting some metrics up for you versus creating a data flywheel, which also has wonderful metrics for you to see. This Client ROI report is built off of tracking all of our client portfolios. We've done this since 2011. There's over 2,000 properties that we have tracked every dollar in and every dollar out. We share this data every single month that's updated for all of our clients. And you're able to see what were your expectations of your property when you purchased it versus how is it actually performing. And we track it every single month so that you can see trends as far as how you're performing. And if there's a low point, we're there to answer those questions for you so we can be accountable and so that we can learn. And doing this for 15 years now and looking at this data since 2011, the millions of iterations that we have now are that vertically integrated approach for you. And that's how we mitigate risk for you. That's how we increase growth opportunities for you and for your portfolio over the next 20 years. So the quality of that data would be a characteristic of a vertically integrated company. And then one easy way to tell is, where are they using that data? You know, on the property evaluations, on the property of the weeks that we do every Thursday here on the show, we show what the expected maintenance costs are for that property over the long haul. Many of you ask the question, well, how do you know that? Well, it's because of this data flywheel that we have created. We actually track properties that are renovations or new constructions, or if they're on city sewer or a septic tank, and we see what the differentiations are as far as maintenance costs long term. That's incredibly critical for you if you're buying rental properties, because what a non-vertically integrated company will do is they'll just put any industry accepted expectation as far as what your maintenance costs are. And that is the single greatest pain point for you. If your maintenance costs come higher than we told you to expect over the long haul, you're not going to be a happy camper. And that's unfortunately what most people find themselves with when they don't have this data flywheel. They don't have this access to data. That company couldn't possibly give them real expectations, and it hurts their overall experience.
Awesome, man. First of all, you got a little bit of extra time today, right?
Yeah, man, I do. This is our time, man. This is like our Super Bowl. We've been looking forward to this for a while.
You have no idea how much I've been looking forward to this conversation, right? Because this really is, this is like I told you, this is awesome, right? For me, right? Because I've been saying this for a long time, and I've been wanting to get a piece of content that showcases all of this. As I'm listening to you talk about it, I'm hearing the full business model being control over acquiring capital, control over acquiring assets, a long-term outlook into how you acquire assets and how long you have them before you can actually offer them, being another tactical advantage. I hear deep relationships long-term with a wide variety of contractors that lead to lower pricing and better service throughout the life of it. And in those kind of first four things, I think of it as, okay, this is what I want no matter what I'm doing, whether I'm going to flip a property or not, right? Like even if I want it for like 3 to 4 years, I want these things there. Then I'm hearing you own the property management company and you align with the property management company as well. And that to me now starts getting into, the longer I want to hold this thing, the better experience that I'm going to have, because I'm in long-term aligned in goals with the same company that I'm doing business with the one phone call that I make. And then I'm hearing, I also have this white glove concierge, data-driven, high-tech service that makes it really, really easy to me. Like if I'm looking at my Bank of America online portal, but it just happens to have every plumbing receipt for the last 20 years that I need for whatever reason, and then somebody that creates a buying plan for me that is allowing me to work towards a final goal, not just here's a property. Oh, you want another property? Here's another property, right? So all of that being that alchemy of all of that stuff is in-house. I guess really the only stuff that isn't completely in-house is the contractors,
Mm-hmm.
right? And the lending institution that you highly vet so that you make sure that the deal closes, right? So you only work with certain ones and make sure the deal closes. And all of that is within the confines of me, the client, and my property and my tenant. We didn't even talk about the massive marketing operation and the highly sophisticated marketing operation that you have that creates a queue of potential tenants a mile deep. So you're always filling the houses in there, right? That is also a part of it. But then there's, and all of that I could see a company doing. Like I could feasibly see somebody else that maybe 2 or 3 markets. I don't know, man. I think that maybe, but then there is a whole nother, we're talking about long-term holding and long-term wealth. So the ability to then influence the environment around the property starts to come into play when you're thinking about, I want to own 1, 2, 3, 10, 20 properties for the next 20, 30 years in a certain market. And now it's when I think we feel like we jump completely from the idea of fake turnkey to the idea of, all right, this is true vertical integration. When we start talking about the way that JWB plays on the local market level, politically, economically, as a driver, and socially on the stage that you provide. So tell me a little bit about, beyond the property and beyond the client, the really deep vertical integration that you have with the way that this city operates and land values in general.
Yeah. And at the core of our approach, it should become very clear to people that it is very different that we are so focused in Jacksonville, right? Everybody else is going to other markets. We see that same opportunity out there. There would be money to be made in those other markets if JWB wanted to go to those markets, just like there would be for other providers out there. But why do we stay so focused here? It's because our goals are aligned. We believe that if we do a great job here in Jacksonville, it is the best risk-adjusted returns for you as the client. And we believe that JWB will profit just as well or better in the long run here as well. We believe our goals can be aligned and we can do that. But it's different, right? It's very, very different. So when we start to think about how I take your money and give it back to you 20 years later with a whole lot more than what you gave me, you have to start to get into macro trends, right? We've been largely talking about the micro at this point, right? How do we handle the property and buy it, build it, renovate it, manage it? Those are all micro trends. If you want to be a player and actually take care of people's money over a full market cycle, you have to understand how macro trends work, and you have to be an influencer in those macro trends. And that's how you actually produce the best risk-adjusted returns for clients over the long haul. One macro trend is home price appreciation, right? In the micro, in the short run, you really can't count on home price appreciation. But when you start to analyze it over a full market cycle, you really can. And that's why people come to Jacksonville. Well, long-term in Jacksonville, properties appreciate a little bit over 4% per year, which is a lot more than the national average. So we need to make sure that we build a model that can take care of people's money for that long-term. We need to get them to that full market cycle to be able to evaluate home price appreciation into our metrics. To be able to count on it, we have to build a model that gets us there, right? If we only built a turnkey company that only got us 3 years or 5 years down the road, right, that wouldn't actually get us to being able to capitalize on the long-term and most impactful profit center, which is actually home price appreciation. It's actually more than your net cash flow. It's more than your tax savings, more than your principal pay down, more than a hedge against inflation. Home price appreciation is that profit center that really moves the needle. And again, you have to be in for a full market cycle. So that's part of the reason that we do that. But you're also thinking about other macro trends, right? You're thinking about the local economy. You're thinking about what jobs are coming here. You're thinking about your downtown and is it fully growing? You're thinking about big items like homelessness, right? How is homelessness downtown affecting growth downtown and more people moving downtown? Because ultimately you need two things for home values to go up. You need there to be the right mix of supply and demand, but you also need median incomes to rise. And so a vertically integrated company is going to be a major player in Jacksonville's downtown, for example, right? Over the past year, JWB has purchased now 5 buildings downtown. Why are we doing that? These are not things that we are buying today to plan to sell to clients in the short run or in the long run, right? We're doing this because we have the ability to make an impact downtown, because things are at that moment right now where we can spur future development. We can cluster development with other developers downtown and create an environment where more people are going to want to come downtown, live downtown, right? In Jacksonville right now, there's a big push to get over 10,000 residents. And I think we're at about 6,500 at the last count right now. And so projects, when a developer comes in and buys 5 properties in the span of a year in a very small section of downtown, things start to move. Other developers start to make acquisitions. And a great example of this too is, our influence, the fact that we have a seat at the table at how policy decisions are made, right? And I'm not saying that we are a part of every policy decision, but there are boards that our team is on. We're invited to stakeholder conversations that really can kind of shape how things are done. Great example of this is the downtown preservation and renovation incentive program that was just passed in October of last year. JWB, along with other stakeholders, were part of this process. We worked with the mayor's office and we worked with the Downtown Investment Authority, of which we're going to meet the CEO of the DIA, Lori Boyer, here in a couple of shows here. And together, we had some influence over putting this incredible program together. And what this program does is it allows historic buildings to receive a larger incentive package for historic renovations downtown. So you've had these buildings that have been in Jacksonville's downtown, these beautiful historic buildings. Well, they were beautiful at one time. They've sat vacant sometimes for 30 years. And the reason they've sat vacant is because there's not enough people living downtown to justify the rents downtown. And if the rents don't justify it, developers don't come in and take that risk to renovate the property. So when that happens, you need incentive packages to be able to spur growth downtown. So we were a part of that process, which has been incredible. And so to put some numbers as to kind of just how this impacts in just a very short run, in 2019, there were $530 million worth of projects completed in downtown Jacksonville. That seems like a large number, but that number should be a lot higher than that. For Jacksonville's downtown, we have a lot of opportunity. You would expect it to be higher than that. 530 is actually more than what it was in 2018, so we're getting there, but you want that number to be higher. Programs like this incentive, this downtown historic preservation incentive program was just approved, and within 3 months of the first project that was approved, we've had over $100 million of projects come online just with this incentive program. So things happen when you're a part of this process, when you have a seat at the table, when you're a part of the community, when you're a stakeholder, and when you're recognized as somebody who brings value to it, you can have impacts here. And what this is going to do to help all of our clients out there is, as you have more developers, you have hundreds and hundreds of millions of dollars of more projects that come online, it will create an environment more residents want to come and live downtown. It will rise rents downtown, commercial rents, so that developers want to come in, and that they don't need these incentives anymore at some point because the market stands on its own. And then all of our clients' properties, which are surrounding downtown, maybe 15 minutes or so around downtown, are set to benefit greatly from this, because as downtowns grow and downtown Jacksonville continues to reach the potential that it's had, you're going to see that all that growth goes out to the north side neighborhood, to the west side neighborhood, the south side neighborhood, Arlington neighborhoods, our 4 main neighborhoods. It's no surprise that when you're working with a vertically integrated company, they're going to have their own investments and they're going to have their clients' investments in those ancillary places that are going to benefit from some of the major projects that are happening in that local economy.
There you go. From really leading the charge of innovation by developing container apartment units in downtown, to being the first call from the city to solve the homeless problem and donating a warehouse in order to like add to those services, to the involvement in boards for historical preservation and creating incentives and whatnot. I think that's where JWB, when you claim vertical integration, it's really hard to argue against the company that has somebody who is a part owner, whose job is to think 20, 30 years down the line, which is right, like the Alex Zafakis role, who's the person that sits on these boards and facilitates all these long-term investments, man. I think that's kind of like the scoreboard moment of just like, all right, man, like everything else, people may be able to like nitpick and say, no, we can overcome it this way or that way. But when you're thinking long-term and you're thinking about what you just said, the macro trends and this idea that everything you just described affects supply and demand, and then affects median incomes, right? Like the ability to attract a labor force, to have a walkable downtown, which are the trends, the macro trends that are happening in the US that get young people to move here. I'm glad we covered all that, man. Can we hit some questions to knock some stuff out? Cause I haven't been answering all the questions because I wanted to like get through all this information.
Absolutely.
Mike Foster asked a great question, which is, the JWB business model makes so much sense, right? Like I completely agree. It makes so much sense to me. Why do you think other turnkey companies don't attempt to copy this JWB business model?
It's really hard. It takes a lot. It takes a tremendous amount of risk to do it the way that we do it. We really went down an approach that, business mentors, other friends in the space that we know, 5 years ago, 10 years ago, thought we were crazy to do it this way, but just deep down, we just felt that we could accomplish the goal of taking care of people's money and having a long enough runway of inventory while staying in one market, staying in Jacksonville. We felt that we could accomplish that if we were just better and better if we positioned our assets and our resources to be more forward thinking. And so that's really just been our approach. Other people don't go down this route because you had to start 10 years ago. And I'll tell you, our business is 15 years into it. So, 10 years ago was 2011. Let's go back to what was happening in 2011. 2011 was not JWB's best year, right? I was, 10 years younger. So I'm 38 right now. So I'm 28 at 2011. And, it was a big decision for us to put all of our chips on the table to buy all of this land and to rack up a significant amount of debt, high interest debt to do it. But we did. And we did it because we know how the fundamentals of this asset class work. And we believed in our team. And we believed that this was the best thing. We believed that we'd be in a position of strength come 2021. So it's not a decision that we took lightly. It's not something that a company can just flip the switch on right now. And now is our time, as we have made those big bets in the past, and they have continued to pay off, which is wonderful because our clients benefit from it. JWB benefits from it. Now it's time to use our leverage, our platform, to be able to become even more vertically integrated, to capitalize on this incredible platform that we have, to be an influencer downtown, to make sure we understand where those opportunities are for clients, and to make sure that we can create those opportunities for the betterment of Jacksonville, because then we can all win. So that's where you're seeing even more strides made in the last year. You can see that through the properties that we've purchased downtown. That's a big, a clear example of that. But it started, that vertically integrated kind of community approach really started probably 3 or 4 years ago. And after doing that many, many years and many, many times over, we now get to have a seat at the table.
Dude, it's so epic, man. When I think about the headspace of just like making that bet and being a 28-year-old guy, just thinking, nah, man, in 10 years, we're going to be the kings. It's just it's really incredible. And then to see it in up close and personal from the eyes of the organization that you've built with the amazing people that actually work for you as team members. And it's really incredible. Like for me it's just like washing over me. But Mike Foster also had a really good question that is, you own all these hundreds of not yet sold properties sitting as inventory. If you've had this stuff for a while, how do you counter the enormous holding costs for all those properties?
Great question. So a lot of the properties that we own are lots. And so the holding cost on a lot is relatively minor, right? We pay 10% on the debt that we own for our, call it inventory properties, right? Those properties that we're sitting on. And so we look at it and it's a calculated risk that we take, right? It's, if the lot that you purchased was $10,000, right? It's costing $1,000 every single year in interest costs to hold that, right? You've got property taxes, insurance costs, and things like that. So I don't know, call it whatever, $1,200 a year that it costs us. And we also analyzed the market and we said, let's make sure that we can carry the carrying cost, right? The holding cost. But what's been going on with the market over the last 10 years, right? Our big bet was based on market values going up in value. And so we looked at that and we said, well, you know what? If market values are going up 4% a year, land values actually go up a lot more than that, right? Land values actually go up a lot more than the home value because, the land value is really small, right? So you want to be in a position to actually hold the land in an appreciating market. And so we looked at that and we said, well, it's a calculated risk. Let's make sure that our business can support the carrying cost, the holding cost of holding on to these, call it 600 properties that we have not built and that we will not sell X number of years ago. And we believed that the market values would continue to go up. And that's what's happened.
All right. So Zach Correa, Zach, welcome, buddy.
Aloha, Zach.
Yeah. Aloha, Greg. There are many benefits to being vertically integrated. Reduce delivery turnaround times, increase competitiveness by getting rental properties to investors directly and quickly, and lower costs through economies of scale. What are the disadvantages of vertical integration?
If you place a high value on diversifying between markets, right? That's not something that a vertically integrated company is probably going to be able to do for you, right? If you come to JWB and you say, I want to be able to, invest here and there and everywhere else, right? At least our team internally, we're not going to be able to provide that diversification within markets for you. So I'd say that's probably the most important one. Now you can go and find a vertically integrated company or try to find a vertically integrated company in those other markets. But some folks say, you know what, I want to have one company that is that turnkey provider across all 15 different markets out there. And they place a higher value on that than the value that you may place on delivering that 20-year return through a vertically integrated provider. So that might be it.
There you go, Zach. Great question. I'm so glad we finally did this, man. Like this was awesome. The user count went up, as it was going on. Now we're back under 30, but we had more than like 35, 40 people around for the entire show. I thought it was super, super valuable, man, from somebody who has come from the perspective of just like really not knowing what's going on behind the scenes at JWB to knowing. I think we crossed a major bridge here. And I'm very much looking forward to creating like a landing page of like everything JWB does and what is turnkey versus not turnkey. Because I think it's just going to be one of these like evergreen assets that we're always going to be able to hit on for people to really understand what they're getting into and the idea that you can actually expect this from a company, which I didn't believe until I peeked back the curtain, man. So I'm glad we got to share that with people. I want to encourage anybody that liked what they heard. If you want to dive into the nuts and bolts of actually one property, not just the whole business model, join us on Thursday for the JWB Rental Income Property of the Week, where we do that. We break it down. And again, join us in the Facebook group. Mark, Paul, everybody here that's new, come into the Facebook group, jwbfacebookgroup.com. You don't have to hear it from ourselves. You can hear it from the 2,500 plus people that are in there and see if we're full of crap or not. And this was just a big ruse that we did. I think you'll be pleasantly surprised once again that this is real and we have a real community and people that vouch for us because there's been, you've done this 3,500 times, man. So this was awesome. Thanks, Gregg.
Thank you, everybody. Thank you for being here. Thank you to the veterans who continue to take time out of your day every single show to be here. I know this one went really long. It's something Pablo and I are both really passionate about. So thank you for being here. And thank you for the new folks. I know Mark is here. He said, I've really stumbled onto something here. Thank you, gents. Well, we certainly appreciate you spending some time with us and hope to have you back on the next show. And we'll get ready for the Thursday one. We'll see you all at 12:30 Eastern. Thank you, everybody.
See ya.